Good evening, everyone. Welcome back. It's Sunday again, and we're waiting for the market to open tomorrow. As always, the expectation is pretty clear. I think we're going to see another gap down. Oil climbed up, so I'm just going to share the screen so you can see what I'm talking about. Crude oil just on Sunday closed close to 100, and this is the WTI. This is not Brent. Brent crude closed over 100, and that's a big psychological barrier. So if it's crossing 100, that's a clear indication that it intends to go higher still. Not only that, escalations over the weekend have only increased because Iran has targeted UAE's ports as well. So, and with the attack by the US administration on the Karg Island, which is Iran's main depot for export and refining, that means crude oil comes under more pressure. I expect crude oil to open gap up again tomorrow, maybe close to 110, maybe 105, 107. But yeah, there will be a gap down, though I do think that this gap down might be bought into a little because there is a seller's fatigue again coming in. I do think it's only going to be one session where we see this crawl back. I think there's much more downside. So I'm not buying into it, and it's just a technical pullback that I expect. I don't expect it to do good. Let me just show this through screener. So if you look at this chart, we've reached the point of the death crossover, right? Now, if we get a death crossover, which is only 20 points away, right? If we get a death crossover, then we're in a place where, yeah, we're in trouble. So almost always before a death crossover, the market tries to pull it back. There are these technical analysts, people who are trading purely on the basis of these numbers, big quant firms, in fact, as well. Your high frequency traders, they'll try to see if they can buy into this dip. They might stay out. I can't say for sure that the market will pull back, but there's a strong chance. Maybe it's a small pullback, but there's a chance. I do think that after that the fall resumes. So what has already happened with the Strait of Hormuz, with private credit, and with AI, a culmination of all these three isn't a 10% fall. That's a recession territory. That's at least a bear market territory. Obviously, India will not go into a recession. That's basically nearly impossible. If you have any questions, of course, feel free to put them down here. So where do we think the first semi-bottom will be formed? I think 22,000K around. We'll see the market try to take some support, given that the situation does not get worse. If it gets worse from here, and by worse, I mean that other parties join in, and by other parties, I mean the Houthis, right? Because they control another strait. These guys control your Strait of Hormuz. The Houthis have control over another strait. Now, if that also gets blocked, then this side channel that UAE has created, right, to pump out, I think it's about 6 million barrels of oil. I could be a little wrong about that. But that also comes under some kind of threat, apart from the other goods that anyway have to move out of the Middle East region. So if they join this, then though we're in some very serious trouble. That's an escalation, and very scarily so. But Mr. Trump has already indicated, or he's brought the nuclear conversation into the forefront. I hope it doesn't happen, but it's Donald J. Trump. Anything can happen. I hope that doesn't. That'll be too much. Now, which sectors would I short now? If I was shorting, I think metals fall now. And that's for a very specific reason, right? This is incredibly curious how these dynamics work. So many would be curious why NACO fell by about 5% in the last session when it had been rising since the start of the war, right? It had given a very good return, about what, 15-20%. So why the sudden fall? See, what happens is when you get this initial supply shock, right? When the metals get more expensive, because you can't import metal. Europe couldn't get metal from the Middle East. India or other Eastern Asian countries could not get metals from the Middle East, which means the price of metals rises. That's good for Nalco, right? Because it's an integrated company. They don't need anything from outside, right? They have the captive energy, they have the captive ore, they have their own plants, so everything internal. If the price rises, they directly benefit. But if crude oil stays elevated for a significant period of time, which 3 weeks is, because the Strait of Hormuz is closed, crude isn't coming back to 60. Even if the war ends tonight, crude will hover at 70, 80 for at least 3 to 4 months now, easily. What that does is it squeezes the margins of metal companies because it is a component, right? They have to, whether you talk about shipping, whether you talk about the smelting part, because everything rises, right? So there, every metal company's margins get squeezed. Not only that, if I'm not wrong, Hindalco has had to stop one of its products because of the rising energy crisis. So now metal companies are being hit because it became a prolonged war. Had it stayed a 2 week war, these companies would have benefited. They would have seen a higher bottom line. But now that it's becoming prolonged, and it's clear that neither party is ready to sort of pull back. Donald Trump, for his own reasons, whether you call it the oil reason, whether you call it the Epstein reason, I leave that up to you. But he doesn't look like he wants even to back down. Israel doesn't want to back down, and Iran doesn't have an option. They're fighting for survival. So that means metals would be the sector under the highest amount of pressure, at least immediately. Now, which sectors can we buy into? For me, chemicals still remains a sector that I'm very bullish on. This is a stress period for chemicals, though, so I'd be slow in it. So there's a company, PI Industries. I call this the sleeper multi-bagger, right? This is like the guy at the gym who has the best physique, but always wears a baggy t-shirt and never shows it. This guy's been an incredible compounder for decades now. So yeah, it's going through a difficult period, but if you look at this price check, it's been about 5 years, right? And if you take it all the way down, which is where I think it has to head to about 2400, it will head to that point in my technical analysis at least. That would mean that it hasn't given any returns in 6 years. That makes us a prime candidate for amazing returns over the next 2 years. So it might show us a big period of volatility. It might still fall. It could take support in the 2400 region where it has taken support multiple times, 2300 to 2400 ka region. That would be a place where I will personally be going long in futures, once at least with a stop loss. But this is a company that I would buy for the long term. If I'm looking for stocks just to compound, and if I want to go long futures, it's going to be in the 2300, 2400 ka price range. But that is my opinion, right? Especially the target prices and entry prices. Don't take that from me, because my risk appetite, the way I work with futures, is I am ready to sit on a stock even if I go long in futures and it goes down 30%. I keep enough margin to manage it. That doesn't trouble me because I have a thesis. If the thesis goes wrong, then I'll come out of it. But that isn't everyone's game. So do your own analysis about all this. Another one is Page Industries. It's a very high beta stock. That's what I like about it. When we get stocks like these at incredible discounts, it's a very good idea to buy. Again, I will be buying in phases. I haven't entered the stock yet. PI Industries have already bought in cash, a very small amount. Again, let's say 1/4 of the total amount I want to buy. Page Industries, I'm going to start entering now. I think there is more fall here because, again, they export a lot. But if you're thinking 5 to 10 years, it's a brilliant company to be in. Now, another one here is Trident. So this is the textile sector that I'm going into now. The deal that India and EU have signed, this stock is one of the biggest beneficiaries of that deal. They supply towels and other forms of textile products to Europe. They've been doing that for a while. And they were one of the biggest beneficiaries of the Indian export scheme, right? You can see the way the stock went berserk. I expect it to give those returns in the future as well. This stock has existed for a very long time, so it's not like it's going anywhere. Now, this 29p is fairly high, not going to die, but I do think that these earnings will also rise very sharply. This would be another stock that I'd be very, very interested in. I think 22,000 is on, 21,800, 22,000. I think that range is definitely on. Whether it happens immediately, meaning in a straight line down, the way we've been doing, or if it gives us a small bounce back before it happens, and by that I mean a shallow bounce back. I don't see a sharp bounce back coming in. So that completely depends. But we have to be careful of the taco trade, right? We do not know how Mr. Trump is suddenly going to change everything, in which case we can get a larger bounce back, but it will always be a bounce. There is no technical level beyond which we can say that this market is now going to go into a new bull run. That does not seem like a possibility. The damage is now entrenched. It's like poison, right? It's entered the system and spent long enough. So now you don't have an antidote that can stop it. We can slow it down. We can have phases where the market shows signs of recovery, but the poison's too deep in the system now. Among other stocks that I would buy, this one, so Irida, I think I'm going to enter this week. I'm going to buy into this company sometime this week. But for me, this is a dividend play. I know it doesn't pay any dividends right now, but that's how I'm thinking about it. Because if I'm going to bet on India, if I'm going to think that India is going to become an energy independent state anytime soon, anytime 5 years, 10 years, then this company has to do well. Because there is no way we get this done with non-renewable energy sources. We don't have the oil, we don't have the coal. The only way to do this is through renewable energy sources. Solar is growing extremely fast. We've managed to innovate in the country, and there's wind power, all of that, right? You know all of that. My point is, this is a bet on India as a whole. The India's long-term growth story, that is still intact. Another one is Dixon Tech. Again, this is one to accumulate, right? This is a brilliant company. There can be no ifs and buts about it. Now, is this going to go up in a straight line from here? I can't tell you if that's going to be true. But I do think that if you're a long-term investor, this is a stock to really, really bank on. But the real plays to make short-term money for me still are on the short side. We'll get to the short side, but I want to talk about some IT stocks before that. Because the moment I think the market is going to turn, this is going to be my first buy. Tech Mahindra and HCL Tech are the two stocks I'm going to buy first when the market turns. Because IT is massively oversold now. Another issue is the AI threat on these companies, and I completely understand that. That's why you have stop losses. So if a news comes out that says that, yeah, AI is in fact replacing these companies altogether, then I'll come out of my futures position, but I'm going to stay in my delivery position. The logic of this was explained by this guy called Rahul Arora. I'm sure you guys must have heard of him. He comes on Z Business, on CNBC Awaaz, CNBC TV 18. And to me at least, he seems like a very knowledgeable man. He's very experienced. I think he has as much experience as I have years in life. And he said something that struck with me that I hadn't thought of. He said that these companies have more cash than they can burn. So instead of having buybacks or dividend payments, what they're going to do is they're going to acquire companies that are doing well in AI. In whichever field they can find, right? However they can generate revenue, they're going to acquire and create an ecosystem to work with. Now, is Tech Mahindra the richest company of this lot? No, it's not. Obviously, you have Infosys, you have your TCSs. But Tech Mahindra does seem like it's a higher beta play. And I like the beta when it comes to futures positions. I hope you guys know beta. If you don't, then you have no business being in futures, right? Then we stick to delivery positions. Now, coming to the short side of things, I'm not shorting anything new. The only new stock that I would short is this. Now, don't hate on me for this. I know that many of you might own the stock, but it's massively overvalued for what's going to happen to its earnings going forward. Now, this is 2021. Then I'd say that, yeah, BSE is a buy even at these prices. Because retail interest was growing, institutional interest was growing when it comes to high-frequency transactions, large trading transactions. But with the increase in STT, with the increase in capital gains, the government has basically said they don't want people trading a lot in this market. They want to make this a delivery-based market more than a trading market. That hurts BSE directly. Because the reason they've seen their earnings climb or the P multiply is because they came into futures and options. Now, if the trading volume in futures and options is going to drop, then who do you think is going to drop out? The people who came in new, right? The people who came in new were the ones who moved to BSE, because the old ones were so comfortable with NSE, they're not going to trade BSE like me. I'm accustomed to NSE futures, right? When I say NSE futures, I mean the futures dictated by NSE. So I'm not going to go into BSE trades in any way. I'm used to MCX. If BSE comes up with a commodity, I'm not going to go into that. So the people who came in newer would have been early adopters to BSE, and this is a small thesis to play out, right? The people who will drop out will also be majority from that period. The ones who've come in the last 3 or 4 years. Because the older ones have seen everything. They've seen worse taxation. That means this stock has to suffer. And not only that, as the market crashes, obviously participation decreases, right? Because retail participation basically goes nada. So if I'm shorting a stock now, it's going to be this. At turnaround, I'm going to short HAL. It's already not really given us a rise. But this is another stock that if it can't perform now, when they have a war going on, it's never going to perform. So yeah, that's how I'm looking at the market right now. Hey, Sniper Dog, how are you? So to accumulate, I think I mentioned 3 or 4 stocks. One was PI Industries. Again, it has to be tranches because the market is very volatile right now. So one is PI Industries, for which I think the point where I go long on futures is 2400 about. That's my personal take though. Sorry. Then there's Page Industries. This is a long-term play though. It's a very high beta long-term play. I'll go in for one tranche and the second, third tranche will come in when I see a turnaround coming. Then in 1 year, it can give me a 60% return. Then we have a stock called Trident, which is a textile play, just like Page, except Trident is more B2B, Page is more B2C. And the best part about Trident is that there's clear earnings visibility, especially with the India EU FTA. This company should be one of the biggest beneficiaries in the textile space. You can choose other textile stocks as well, but it's something I'm interested in. Chemicals, consumer durables, and textile exports. Those three right now seem to be the best. I would stay away from power now. It's become a common theme. Every news channel has spoken about it. Everyone is talking about it. That's usually a very good sign that distribution has begun. Otherwise, you wouldn't see it being popularized. It might sound like a conspiracy theory, but you all know it's true. About shorting private banks. So I was short on Axis Bank at about 13, 20, 30, I think. I've come out of it though. You're right, John. I mean, it's a very intelligent way to think about, to think ahead. So I wouldn't short right now because they've fallen a lot. But yeah, they are under threat. There's no doubt about it. The king of private banks right now is the ICICI, and if ICICI is falling in a straight line. So usually, right, if you look at the long-term chart, you'll see that they have periods of rises and falls, right? So this seems to be end of a period. And going by past history, the bottom should be here, which seems nearly illogical. More practical seems here, but it could very well go to 550. It has happened in the past. It could happen again. And 550 is even, I mean, there are possibilities for further fall. There's a strong possibility it stops here. There's a possibility it stops here. Many supports in the way. But yes, there is definite downside. I, however, would play it differently. I wouldn't short private banks. I would short NBFCs for two reasons. One, they are higher beta. Almost all NBFCs are higher beta than these massive behemoths. And second, they are more susceptible to credit losses, in the sense NPAs. So your Bajaj Finance is more susceptible to NPA increases than is an ICICI bank. Now I understand your DII play, where you say that when DIIs run out of funds and FI is running out of funds, they're both bad for private banks. But the thing is, DIIs own just as much of Bajaj Finance or a Shriram Finance or an L&T Finance because they're also involved in it. Then there's PSU banks, because you can rest assured that within the PSU banks' balance sheets, there's a lot of cockroaches hiding. Many people, many experts have spoken about it, and I'm firmly in the camp that we're going to see some sort of a reality check for the balance sheets of our PSU banks at the very least. Private banks, I don't think they'll do that because, again, they're private, right? There's usually no external pressure to do this. Maybe one or two banks might have done something untoward, but the larger banks, HDFCs, ICICIs, I don't see Kotak, even Axis, they run a very safe ship. Like you basically cannot cut through it. And this, I'm coming to you with a channel check. Like I know someone who works at HDFC, very good friend of mine now. He's been my banker for years now. And I tried to get him to get me a product that shouldn't be allowed to me, technically. But I thought maybe through our relationship, maybe it'll work. And it did not. He just apologized. He says, so it's just not possible. The system will not allow us to do it. So it's physically not possible to happen. There's no way to work around that. I checked. So I don't think that these banks can really suffer as much as a PSU bank will. Small gap down, Sniper. I think there has to be a gap down. It might just be large depending on crude. I do think crude will open gap up. And the only reason I don't think we might have a big gap down, and it's still possible, but I don't think so. This time I'm not very clear on the kind of opening we'll see. So I won't give you like, okay, this is what I expect. Gap down, yeah. Massive gap down, maybe not, because we fell a lot on Friday. We never really recovered. We just kept going down on Friday. You know, if you look at the Nifty ka chart on Friday, there were no signs of a recovery. It was just down, 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 and down. So in these cases, usually there's a short covering that comes out on the next morning. Usually, in my experience at least, even if it opens a percent or 1.5% down, usually a short covering comes in. But if the market has truly started to digest that this war is not stopping, now this is something that maybe there's a 20% chance this happens. But if the market is truly digested that this war is going to go on for 2-3, then we're looking at a 5-6% fall. It's not going to happen just tomorrow, but it's a minimum 5-6% fall in the coming week if the market has to truly digest it and nothing else changes, because this then is the end of an era of crude, of falling crude. Hope that doesn't happen. Yeah, it was their Infinia credit card, right? Like the top tier credit card, which they only give out to salaried employees or businessmen with a certain amount of exposure. So I don't really do that. Can't do it, sniper dog. It's not possible. You can use any naval might, but you can't open up a strait that's 20 kilometers long. So Prakash, there's this thing about mid and small caps, right? And please do mention this particular stocks that you're looking at. But there's this thing about small and mid caps. I'll just show you with a chart. Let me know if you want to talk about mid caps. I'll switch to that. But yeah, I think we should work with mid caps. This doesn't have long enough. So if you look at this chart, right, you notice that mid caps have periods of explosion and then long periods of consolidation. We had our explosion. Now it's a period of consolidation, which will last for a while. I'm not saying that none of the mid caps will outperform. Some mid caps will do really well. Some small caps will do really well. But as a sector or as an index, it has to consolidate for a significant amount of time. If the peak was made here, I think the average cycle for a consolidation range for the mid cap stocks as an index is about 5 years. So I don't see this index giving us massive returns, even if India's growth story plays out for another 3 years at least. Safely said, I don't see it happening from here, let's say till the end of 2027. I don't see that happening. So maybe 2027 mid would be a great time to go into mid caps in a big way. But before that, usually when we come out of bear markets and a bull run starts, your large caps lead. Your mid caps and small caps are the second phase of a rise, right? So I'd want to go into IT, which if you guys have seen this visual that shows how economic cycles work in the stock market and their sectors. In fact, the new book I'm coming up with has this. So you can pick any of these. Which one is the cleanest? This seems to be the cleanest, right? And the biggest. Perfect. So, and this is more or less true, right? You can't just assume that this is exactly how it would happen, but it's more or less true. So when a market bottoms, right, if you can see in this region, you usually start with finance technology stocks, right? Technology stays throughout. Notice it's still here. Then you move into, and this is exactly how the bull run after the COVID crisis played out, right? So you have technology leading the way, banks leading the way, and towards the end we have healthcare utilities, which is again exactly what we saw happen here. Remember, SBI peaked out like 2 weeks back. So what I would want to do is, even if I'm going into mid caps and small caps, they have to have a very healthy balance sheet, an incredible ROIC, meaning they're growing very fast, and they have to be within the sectors that fit into that part of the cycle. If these three checks are not met, then I wouldn't be going into those stocks. I know Sniper Dog, he might have said that, but he can't do anything. No? That's like me saying that I'm going to climb Mount Everest without an oxygen tank tomorrow. I can say whatever I want. That does not mean I can achieve it. Right? And we all know that Mr. Trump isn't like the other presidents, right? He doesn't always follow through on what he says. So about NTPC Green, let's take a check. Look, so the thing about power stocks, right, is they're a bit... I think there's too much noise around them right now. That never ends well. I do not remember any period in my career. It's a proper career with just doing this is about 6 years, and being involved in the stock market is all of my life, 28 years at the very least. I have never seen this happen, that a stock becomes popular or a sector becomes very popular and it still delivers returns over the next 6 months. I've never seen that happen. What always plays out is that when a sector becomes popular, it first falls after that. It might give you a return for a week, but then it's going to fall. Now, after that, it might rise. After that, it might rise, a bull trap and then rise. That's always possible. But there is always a fall once a sector becomes popular because saturation ho jati hai, na? Everyone who's interested in that company in any way goes into the company. IRIDA is at a good zone to start accumulating. That is for sure. For me, I think the bottom is 60, its listing price. I don't see it going below that. But I mean, if I don't buy IRIDA at $115, then I should not be in the stock market. To accumulate, I'm not saying that I'm going to go in and buy 20,000 shares of IRIDA here. But this isn't a bad place to buy 1,000, 2,000 shares and then kind of accumulate, or depending on whatever your portfolio size is. If your portfolio is 100 and I plan to, let's say my portfolio is 100 and I plan to invest 4 in total in Irida for the long term, I'm going to buy one today. Whatever my capacity is based on that. At least one tranche. It's a solid company. Now, there are certain stocks that I've shorted very recently. Sorry. So this is the one that I've just shorted. It started falling, thankfully. I shorted it at I think at 1100, somewhere here, right? 1050 or something. I can check, but you get the gist, no? This is a prime candidate for a massive fall. First reason, it's an NBFC, very susceptible to NPAs. Second major reason, most of its lending is to commercial vehicles, right? And they will suffer the most. So this is a stock that I would be very interested in shorting. And BEL is another one. With the whole drones taking over. So there are multiple reasons for BL now, right? One is drones are kind of making radars unusable. Like there are so many drones. What are you going to do? The systems that the system that this company became popular for, it was used against Pakistan, and Pakistan had nothing. If that was Iran, I do not think if the third system developed by the US can't do anything, if the S-200 that S-400 that Iran has can't do anything, then there is no chance that Akash Tir would have had against the kind of weaponry deployed there. And that is a realization that I think militaries across the world are going to get now. That the old school way of thinking about defense does not work. You can't intercept 1,000 drones with 1,000 missiles. Something has to come in that changes this game. And that will be bad for this company because they are old school. They cannot change as quickly as a US private firm will, for example, or an Israeli private firm will. Second is the Indian government's spending power is going to decline significantly. This is more important. The first might play out today, 6 months, 1 year, you never know. But the more important part is India's spending power is going to decline. They're going to need support from the government to keep people fed, right? Keep gas, make sure that the price of oil at the petrol pump does not increase. They have to subsidize industries that are being hurt by this war. The basmati rice industry is pleading for help. Metals industry is pleading for help. If you didn't see Mr. Anil Agarwal's interview for India Today, watch that interview once. The man looks like he's seen a ghost. These industries are going to come to the government and say, save us. And the government will have to open its coffers because, of course, it will. Otherwise, what happens to our industrial revolution, right? What happens to our Make in India revolution and all that? That means they don't have money to spend on this thing, especially something that is increasingly looking like it's going to become obsolete. So defense, railways, these are all sectors, PSU banks, these are all sectors that seem like they might see some trouble ahead because the government itself will be in some trouble ahead. So Adityan, if it depends on what you bought NTPC for. If you bought NTPC because it's a safe company that you want to keep, get some dividend out of it and just keep compounding as much as you can, because the India power revolution is very real, right? It's not like India is not going to become a independent company when it comes to power. So if you bought it for that, then I don't see why anyone would want to sell NTPC, whatever price you buy it at. But if it is a 1 year, 6 month trade, then I think I mentioned it some time back, Aditya. Sorry to say that, but we should have been out of these stocks. And we should never buy stocks when they're at their peak. That's a rule that Warren Buffett also lives by. Never buy a stock at its peak. That rarely works out for the better. Olivus Life Sciences. I have never heard of this company. And I cannot find it either. Alveus. Could you spell it again, my friend? I don't think I can find the stock here. Okay, now, what would be my trading strategy tomorrow morning, right? If I'm trading in Nifty, I'll just check Sniper Dog. So if I'm trading Nifty tomorrow, I'm going to see where the market is opening. Of course, news matters, but given the news we have today, if Nifty opens more than 1% or 1.5% down, I'm going to take one small bet for a short covering. Just 200 points, 100 to 150 to 200 points. I think Mr. Anil Singhvi, Z Business के जो analyst है, his read on Nifty's turning points is exceptionally good. Like, it's crazy good. I know everyone has their flaws. I'm not talking about the stock picks and sectors and whatnot. Let's leave that aside. He works in mass media. There are certain things that need to be taken care of there. But when it comes to Nifty read, I want to just know his pivot points. And depending on where it falls, I want to play for a short covering just once. If I'm a day trader, if I'm someone who's looking for one short hit, very small stop loss. But I think there might be a small short covering, followed by further fall going forward, given that nothing else changes. Okay, let's start with Alavis and then we'll come to you, Prakash. Alavis Life Sciences. Okay. Very recently listed. That is not good. So it's Glenmark. Okay. Seems like something I should have known about. So there's no doubt if this is. Okay. Yeah, if it's Glenmark Life Sciences, then there's no doubt. Overall, it's a great company, no doubt. But would I buy here? No. No, that's not happening. Small and mid caps, I'm far away from. Very, very selectively, but no. So Sniper Dog, no small or mid cap stocks, except very selectively those stocks that I can see a clear earnings trajectory growth for. Stable earnings is not good enough. Stable company is not good enough. The only mid caps and small caps that'll grow now are the ones that are growing at a roke of 25%, 30%, 40%, which is why I like Page Industries. It's a large cap that's growing at a roke of 40%. So those are the kind of stocks we want to pick. And stable roke, right? Can't change. Aarti Pharma Labs. I think I missed something in the middle. Sorry, Prakash. MGL, right? Give me a minute, Ashima. How are you? I'll just come back to that. You know, it's a gas company, so it's going to face trouble. But if I'm thinking long term, it's a good time to buy. It's a good time to buy if I'm thinking long term. It'll take time. There might be more fall ahead. I don't see it trading near any major support right now. I think the major support falls at 777, 800 about. So there's a 10% fall here. Maybe 1,000 will be a psychological barrier. But if I'm thinking long term, then I know it's going to double, right, in the next 3 years. Never happened that it didn't double. That it at least didn't come back to its peak in every 3 years. So yeah, it's if I get a 2x return in 3 years, that's not bad returns for a stable company, for a company that's decently valued, is safe, right? So from that perspective, yeah. But is there risk ahead? Definitely. It's basically one of the most exposed companies in India. This, all your fertilizer stocks, your OMCs, even refiners now. So even the upstream companies now are in trouble because I think OMCs just came out with this declaration that they might pay these companies like MRPL and all, the Oil India, they might pay them less than market prices. Otherwise, they can't absorb the loss ka shock. And I think that is the reason why you saw your MRPLs and everyone fall over the weekend, on Friday. So if it is owned by this group, it's definitely going to be a good company. So what I would do, I'm just going to take you through this research because I haven't analyzed this company. I would check what Xanthine's uses are. Right, that's how we start. So we know COPD is a massive field, and given India's pollution levels, you know COPD medication is going to become more and more important. So long term, this becomes a brilliant stock. What I would still want to check though, Ashima, is if Xanthine is being replaced by something. And I can use AI for that. You just have to ask AI the right questions. That's the tough part. So what I would ask is there an alternative for Xanthine that performs better? And then I'd check, is there something in development? Give it some time. But if it has a 20% share in Xanthine and Xanthine helps with COPD, is commonly used, and we know that with the pollution levels in most of the Indian big cities, we know COPD is going to become more and more common over the next 20 years. 40-year-olds are going to have advanced COPD because they're breathing 250 AQI air in Delhi. My son is at his Nana's right now, and he's breathing 150 AQI, and I'm so pissed off about it. But what can we do? That's the reality of our country. I can't stop my wife from going there, right? But yeah, so the company should have a strong feature, but I just make those small checks. Unitech is, come on, Sniper Dog. These aren't companies anyone should buy. You know that before I check. Like, I've been seeing this company for what decades now. Why would anyone ever go into it? No, come on. There are so many good stocks, Sniper Dog. You've got to be better than that. Or were you trying to have fun with me there? So, for example, if you want to go into power transmission, right, you have your safest play out there. What is going to happen? How is the country going to grow without power grid growing? It has to, right? You have another one, you have Adani Transmission. I think they changed the name. What did they change the name to? Energy Solutions, right? Yeah. So, Adani Transmission is another one that I would go for. I don't think this is the one, but that's another one that you can go for. And there's so many other stocks. I've made videos on them where you have transmission companies mainly in focus because energy generation is easier to build than is transmission, especially the high voltage transmission that we are planning to, or India is planning to go ahead with. So if we're playing the transmission space, then Power Grid is pick number one. Adani is another because at least until Mr. Modi is in power, because whatever happens, they are friends. I don't judge them for it because if honestly, if I was to give an important job to someone about, let's say, if I'm the prime minister of my house and I need to build something in my house and I know that my friend does it, would I not give it to my friend? I trust him. Why wouldn't I? Why would I give it to someone else? I don't judge him for it. But I do think that till Mr. Modi is there, Adani will succeed. I'm not saying it's justified. I'm just saying I can understand it. So Walchandra, yeah, it's a good company. Banco Products, yes. I really, really like this company. You know how I came across it? I was sitting and I was basically doing nothing. I was just chilling and I thought about, you know what, let me try talking to AI and finding out what its favorite stocks are in India, small cap stocks are in India. And every AI I talked to picked up Banco Products. Every single one. Every time I asked it, every form I asked it. When I put in market cap, when I put in 5-year horizon, 10-year horizon, 3-year horizon, multi-bagger, everywhere I asked, this stock was always there. That's when I went into research it. So just for the fact, if we're going to take risk, right, let's take it the right way. And this is one of the best ways to take it, I think. But yes, gotta be patient. Can't think that I'll buy it at 550 and it'll straight go to 1500. If I was thinking of buying at 550, I'd be ready to see 300. I'd be ready to see 100, knowing that it'll go to 5000. Something very similar was with Knowledge Marine Engineering Works, and I stand by this. Let it fall. This is going to be part of my portfolio because India is going to strengthen its coastline, and this is going to be the main beneficiary of that. It saw some big dips, right? Went from 1200 all the way down to 600. It halved basically, but you just stay patient and you get returns. So Banco, I'm still banking on, if that's the way to put it. Any other questions, guys? We can make it a shorter session because nothing's really changed. It still remains the same, that this is a time to actively preserve capital. If you can make any amount of money in this market, then you're basically better than 99.999% of the fund managers out there. So Coal India is a very dubious question. Are coal prices going to rise? Yes, but channel checks tell me that corruption is rising again within the sector, and that always means that the balance sheet weakens. So would I buy Coal India just for that corruption part? I won't, because if it has become as rampant or more rampant than it was, let's say 12 years back, then it becomes a risky company to go in. Because the reason PSUs have done well is because they ran a cleaner system. Let's not be confused about it. Whether it's PSU banks, whether it's power stocks, whichever one you pick. The reason they performed well is because the cleanup didn't just happen in the balance sheet out of the blue, right? Before the balance sheet becomes clean, the personnel cleans up. And if that's changing, then it's a strict no for me. Then it's going to trade at a 1-2 copy again, like it did almost all its life. Doesn't have a recession in its bag. So no. If it had faced a recession, I'd be okay with it. But otherwise, no. Like, why would I go into logistics, especially with what we call consolidation happening in this industry? I really wouldn't. Keynes Tech 3000, if I'm remembering the price right. Keynes Tech is for the long term. Yeah. Because as long as AI is going to be anything, Keynes Tech is going to do well. So yeah, this is a stock to accumulate. I know it doesn't have a recession in its back or whatnot, but it's a modern age company. It's a true modern age company, unlike Eternal or whatnot, which have zero moat. This company has a moat. This company is doing something that not every Tom, Dick, and Harry can get up and say, I'm going to do tomorrow. Right? So Keynes Tech is a real company that I would want to be invested in if I'm thinking long term, but I'm ready to see it fall as much as possible. This is thesis oriented investing. This isn't price based. I will go in, and the moment it reaches this peak, which is 3,000 about, I'll go in once, 10% lower from here, and then I'll just keep accumulating, even if I have to accumulate 10% higher. Do you have a particular stock in mind, Asham? So, Parth, you have to read annual reports, but you don't have to read everything. In my opinion, the way I like to go about annual reports is I first understand what the company does. I try to see where the opportunities and risks lie. And then I'm going to see in the annual report how they're addressing that, if they're addressing that. I don't want to read the rest of the jibber jabber because there's so much that does not concern me as an investor. Like, I want to know what big investments you're making. If there's a big management chain coming up, what is your vision for the future? How are you putting yourself across as a company? What is your main focus? I want to see if you understand what your SWOT is. That's what I want to see from the company. But I don't want to go into the nitty gritties of exactly how much money you're spending on this and how much you're spending on that, and then extrapolate that this much spending will lead to that much income. I don't want to do that because that can change any day. The company can come in with an announcement and say, I cancel this, or come in with an announcement and say, I'm doubling this. So when I say reading annual reports, for me, it is more logic oriented than it is numbers oriented. More of the research happens before I get to the annual report than happens after. One day, hopefully, I'll be big enough that I can really go into numbers, sit with the management and say, is this the level you're looking at? Okay, then you commit to me that you'll do it at this level. So when we have these giant investors say that read the annual report, that's because they have the power to go ahead and affect the company. As retail investors, we don't have a voice. So we just have to trust the management to do the right thing. That comes out of logic. Jubilant food. So the LPG crisis has to hit them, right? But I think it will hit them less than it would others because they mostly would be using electronics, right? Electronic ovens and everything else. So is this a good point to enter? I don't think so. It still hasn't come below its average P, right? I would wait. It might not come there because this seems like a very strong support post 2021 440 region. Seems like a very, very strong support, but I would wait. It doesn't hurt to just to wait and see where it goes. If it rises, it rises, right? What can we do? Missed opportunity, but I would want to preserve my money there. Precision Wires. It's a good company. You know it's a good company. But would I go into it right now? At all-time highs, even if it's doing the best job in India, I wouldn't. It's near its all-time high. It's too risky for me. Like, look at Ashima. Just there is one thing that I'm a firm believer in, and I might be wrong. Someday the market might prove me wrong, but so far it hasn't failed me. We repeat patterns. The patterns might change a little bit, but the movement over a period of time follows the law of averages. These kind of rises come in these stocks, and it doesn't stay long. We're going to see a long-term consolidation in stocks that have suddenly given 50 bagger returns. In 99 out of 100 stocks, only one of those will still compound at 20%. I don't like those odds because in 99 I'm losing money and one or maybe five I'm winning money. That's not how I like to invest because there I'm going against probability and nobody wins against probability. Probability dictates, or one of the founding principles of probability is the law of averages. Advanced probability, if anyone here is a math nerd. That's brilliant, Sniper Dog. I mean, that's 7x return. Interact. Again, I've heard about this company, but since I've not been buying stocks, I will not be buying stocks. Too recently listed. No. This period is not to buy stocks that give you 50-60% return. Please. Especially you guys, right? Sniper Dog, Ashima. I've known you guys for a while now. I mean, I feel like I've known you guys for a while now. The only piece of advice that I want to give you as a friend, right? I'm not an advisor, but as a friend, what I'd like to tell you is that there are periods in the market where the market is sucking everything out. This is one of those periods. All the market is trying to do right now, think of the market as a beast, right? As a dragon. It's sucking all the air in. You don't want to get pulled in. So what you want to do is you want to anchor yourself to blue chips, to massive companies. They will not get sucked in. You don't want to find a small nail that's made of gold. It doesn't matter what the nail is made of. The market is going to suck everything in. So I will never go into small caps, mid caps when we are heading into a bear market. Or at least the volatility is this high. Let it settle down. There's plenty of time to buy. When these stocks rise, they give you 10x, 20x returns, right? Even if you miss the first 20%, what happens? Nothing changes. You're going to miss 20% on average, right? Circuit to circuit to circuit to circuit. Circuit to circuit to circuit. It's not going to rise more than that. In one day, you still get a chance to buy. And if you miss out on one, sure. But remember, if you lose out 100% of capital. Because you'll never be able to sell if it keeps falling. That is a very strong instinct. So as a friend, right now is the time to buy into your large companies who have proven. Within that, I went high beta. I'm thinking of Tech Mahindra. I'm thinking of PI Industries. I'm thinking of Page Industries. Because I know these companies will not go anywhere. And they will give me the sharpest returns the fastest. But I'm not going into a company that has a 3,000 crore market cap or a 10,000 crore market cap. And I don't know if it's going to survive. Because what does it do? Pre-engineered steel construction solutions. Okay, let me open a company to do that tomorrow. Right? There are 15 companies who can start this business tomorrow if they want it. Much bigger than them. So does this sector has potential? Sure. Can it suddenly give multi-bagger returns if they get taken over? Of course it can. But would I want you to risk your money on that? No. Why? Protect it. When the next bull market comes, you will double your money in 6 months if you have the capital protected, ready to invest. Which Tata, Janan? So Supreet, nobody is shielded from crude fluctuations, right? There was one sector, metals, that could have done well had crude been high only for, let's say, 2 or 3 weeks. But now that it's been persistent, now that it's become entrenched, it's maybe a week away from being properly, irrevocably entrenched, but it's more or less entrenched. At that point, everything suffers. At that point, it hits the consumers' wallets, it hits companies' bottom lines, every company, because it hits a consumer's wallet. People stop spending, companies suffer. That's the vicious cycle. Companies suffer, salaries don't get raised, people stop spending. So that's where we are. Nothing is safe. Nothing rises when crude goes to these levels. You can check. It's 4 times that this has happened, right? I think this was 1970s, 2008, 1983, and then now. I think I might be missing one of the 1983 column. Maybe I remember wrong. Could you just give me the full form of PEB here? Because it can mean a few things. So you mean pre-engineered buildings? You were talking about... if that's what you mean, then yeah, I agree. Yeah, anyone can go into this. I think that's what you meant. Okay, Prakash, we have advanced enzyme, right? Yeah, you're right, Janan. I agree. The moat isn't there. There's no entry barrier. Like, if you want to think about it, I'll just get to advanced enzymes in a second. But if you want to think about a company with a moat, right? This is a company with a moat. Like, you have a patent, you work with ISRO. Nobody else can do what you do. That's a company with a moat. It didn't crash. Why would it? Because large investors are not going to sell. And if they're not selling, then the market generally it does not crash. And this is accumulation. Promoters are not selling. FIs are still buying. DIs are still buying. This is what a good company looks like, right? A real moated company. It will also fall. Don't get me wrong. You can see 5% here and it will fall. It might correct 20% from here. It might go all the way down to 900. It might go further down. I can't tell you where it will stop, but it will correct less than a company that doesn't have a moat. In all likelihood, it might fall to a 20 ka PE, but when you look at it 5 years later, accumulating this stock will give you returns. On average, if you accumulate 10 stocks like this, will give you double, triple, 4 times the returns, and accumulating companies that just exist, if you understand what I mean. So Jatan, no, railways I'll stay away from because the government is going to come under pressure and I don't want to be exposed to that. ACE is the same thing, right? It's civil construction and then again, the government comes under pressure, payments are not made, disputes happen. I wouldn't want to be in any way exposed to the Indian government right now. Because they're going to, if they do right by the people, they won't have the money to do anything for the companies. Again, CG Power, it's a power sector. It's been in the news too much, Deepak. Is it a company to be in? Yeah. Power, I think, as a sector should do really well going forward. But would I buy it right now? No, because the sector as a whole has been hyped up too much. That usually leads to a saturation. If I get a correction, then maybe. Venus Remedies, right? And by correction, I mean the sector. I don't have to look at CG Power ka chart P. So this is very impressive that the stock is rising when the whole market is crashing. Thank you for bringing it to my notice, especially right after the war began. Pharma company, very no. This could just have been a manipulation. 1,000 crore ki company ko to me and 5 of my friends can manipulate if you want to sit and do that. We obviously will not, but what I'm trying to tell you is that this smaller market cap, we can't really establish trends. Anything could be a manipulation. Okay, there's an FII, so I'd want to see where this FII is invested. Okay, Bharat Gas is a good company, so the FII also seems decent. DIs have just started coming in. That's very interesting. Do we have any major investor here? Why is the Investor Education and Protection Fund invested in it? That seems a little... they don't generally go into very great companies. No? They generally go in if they see something's wrong. But it is an interesting stock. I'll have to dig deeper into it. I can't tell you not to go into it, but I have to go deeper to see, because this chart doesn't look promising, if you understand what I mean. The company's gone nowhere in 20 years. 20? More than that. Yeah, 20 years. So has something like that changed? Do you know of something that has massively changed for this company that should do it? It wasn't meant to be a flex path. It was just, just a point. We can't trust everything. So Jatin, it depends on what you do. If you are someone who gets a regular income coming in and you don't want to be bothered day to day about reading the news and whatnot, then what you should do is mutual funds. Then you shouldn't be exposed to the stock market at all. It's too much pressure for nothing else. Even if you can eke out better returns, it's just too much pressure for no reason. Every morning you have to wake up and see how your stocks are doing. It dictates your mood. And then it takes years for you to get to a point where it doesn't affect you anymore. So I wouldn't do that, just for the peace of mind, if nothing else. Where are we? So yeah, mutual funds. Top 3 sectors, I think the first would be, right, so, guys, an extremely disturbing guy has just joined this live. He's one of my friends from Bangalore. We'll just ignore anything he says. Right. So the top 3 sectors for me for the next, let's say, 2 to 3 years: chemicals, power, for just a pullback, for like a trade, even metals, when they fall, all of these, when they fall, even textile stocks, textile export stocks. So 3 is tough because I'll always have to diversify. You need at least 5 to 7 sectors ka exposure, so that at least 1 or 2 are playing out and then you can circulate it. At least 5 to 7, if not more. 1 or 2 from each, that gives you 20, 25 stocks. That's usually how I would work. So Prasant, again, it depends on how you're looking at your investment. If you're thinking about staying with L&T forever or 10 years, then L&T at 3,000 is a blind buy. Because is the stock going to go anywhere? No. But if I'm thinking about myself, someone who makes an earning out of this, then no. Let me just show you where I would be very comfortable going long in futures, for example. First tranche would come in at 3,100 about, because I'm sorry, it's shown that it was also a support and a resistance, right? A resistance here in 2023 and a support here. But if I look at L&T's cycles, and this is now a longer term picture, because most likely I won't go into 3,100 for the long term at least. There it will be a 3-4% play with a 1% stop loss. A long term chart shows me, again, ups and downs are big, not small ups and downs, right? Usually it comes back to its previous low. And its previous low stands somewhere here, here, or here. So those are the 3 places where I'll enter L&T with small stop losses. At about 3,100, maybe at about 2,900. Finally, the last one, which I doubt it will, but it has done that in the past. If you're being skeptical about it, L&T is corrected by 70-80% multiple times in the past. At 1,500 about, I'll be like, done. This is it. Now I'm going massively long. If it gets to that point, then sell your house and buy LNT. Janan, if you have to ask that question, then the answer is no. Trading in futures is the easiest way to lose all your savings. You have to be extremely confident in your position. There can be no second thoughts. You have to manage your margin such that none of your equity is exposed. So, for example, the way I manage my margin, if I have, let's say, $100 with my broker, right? Let's say 50 of that is invested in equity, like direct equity. I mean, I bought the shares, it's in my demat account. Now I have 50 to play with, right? I'm only going to go long or short 20 to 25 maximum. That is also too much. I usually don't even do that much. I'll always keep enough buffer so that if the market opens 5% gap down, 5% gap up, I'm covered, because that happens. And if in that position you don't have margin, you lose everything in a day. This has happened many times. The only people who should go work with futures are people who know the market, have spent enough time, have the fortitude to see the downs, because futures ka downs are amazing. I'll give you my example. I'm short on Nalco. I've been for a while. I plan to be for next 2 years. Let it do what it does. If it doubles from here, I'm going to short more. I'm going to wait because metals will move in cycles. When it does crash, it'll 4x my money easily. And given that I'll keep shorting, it'll do more than that. But I'm ready to take that loss for as long as it takes. That is a bit of a personal question, Sniper Dog. Right? But enough to be working in futures. That's all you need, right? Enough to be working in futures. Enough to be going to Aman Properties. If you understand that, then you understand where I am. Anyway, any other questions? Because as I said, one of my best friend has joined this chat, which is troubling. I don't know what he's going to say next. Save your money, Janan. I have a feeling that you're working, that you have a job and you're doing this. So if you're working and if you've got income coming in, don't put your hard work. You earn that money with hard work. Don't put it under threat like that. Preserve for now, and you'll make enough returns in the next bull market. Advanced enzyme. Sorry, Prakash. I feel like you asked me this pele. Hey, we talked about it. No, it hasn't seen a recession. That's my only problem. I don't see why not. I know that this company has a good reputation. That much I know. It is not trading expensive valuations. Valuations are fine. It's corrected quite a lot. That gives me a margin of safety. I don't see why not. As a long-term bet, yeah, ready to see further falls. Yeah, it seems like a decent company to go into. But it has to be a 3 to 5 year. Any small cap, mid cap has to be, 3 to 5 year play. Can't be a smaller play than that. But yeah, seems like a good company to buy. Thank you for bringing it to my radar. So Sniper Dog, I'm going to start accumulating now. I'm going to start accumulating, but very little, because this is not the end of anything. I don't think the market panic is ending anytime soon. I mean, 22,000 pay is where I aim to cut my shorts. And by the time it reaches another strong support, which the experts will give you after, I don't want to say it, Abhi, but by the time it reaches that, I would have been, let's say, 50% invested. Yeah. Futures, man. In equities, as in delivery, I'll be invested 100% by the time we reach 21,000, 20,000. If we do. But yeah, it's a good time to start accumulating. I don't know where the bottom is. Nobody does. Very young. You know, if there's one thing I'll tell you that I didn't understand at your age, the stock market isn't about finding the greatest multi-baggers. The stock market is about not losing money. If you don't lose money in the market, you will make money. There's no way around that. And you'll make amazing money. So the only learning that I learned too late was to protect my losses. That's all I'll tell you. But amazing at 24. Yeah. Great, but you shouldn't say all that on public channels, right? Come on. Don't do that. Sure. Thank you so much, everyone. As always, it's a pleasure speaking to all of you. Wonderful questions again. I got 2 or 3 stocks that I can now kind of work with. So if there's any other questions, I'll stay on for 10 more seconds. But otherwise, thank you. Thank you, Path. Thank you, Sniper, Prakash, Ashima, everyone. Thank you so much. 10 lakh in gold, 17 lakh. So gold has to be a permanent investing, right? Like if you bought it, I'm hoping that you're going to keep it. Like for your kids and everything else, then that's it. You're done. If you invested 10 lakh today, leave it for 20 years. You're done with anything you might need for your kids. You're done with all of that. Yeah. I'm hoping you bought it when it was less than lakhs. So you're talking about 100 grams of gold. That means, you can wed your children. You can pay for their college education in case you hit the worst parts of life. So I would sell gold I've bought. If I've just bought it, leave it. Helps. But don't think of it as a return. I don't think gold is going to give you good returns over the next 5-7 years at least. So Prasant, see, oil-based stocks, anything exposed to oil directly is a big no-no. Even though stocks like Jindal Drill or even your Oil India's directly, even though it might seem like a good time for them, policy response can do anything. So this becomes a very volatile sector. 10% up, 10% down ka game hoga. So I wouldn't be in it. So MCX is overvalued. For sure, it's overvalued. Driven by the fact that most commodities have become overvalued. Because commodities are trading higher, you have this frenzy to go into trade in commodities, right? And that's what MCX. Plus, of course, they changed their business model, right? That's there. There's a fundamental reason for the re-rating, but it's too much now. Now, NSE, I, as a matter of principle, don't invest in the grey market, but BSE is the indirect play, and I would be shorting BSE because the government has made it clear they don't want people to trade, and if people are not trading, then we know that these exchanges will face trouble. You don't have kids. That's another way of saying that you don't have kids, Sniper Dog. Because if you had a kid, you wouldn't have been able to say that. I have a son. Once you have a son, you don't think about anything else. Anyway, once again, thank you so much. Now I really gotta go. I have my niece here who's been looking at me, calling me there. So now I gotta go entertain her. Have a wonderful week. I'll see you again midweek. Most likely things are volatile. Otherwise, it's as always been an amazing pleasure. Talk to people, tell them to join here so we can have more intelligent discussions, more challenging discussions. Good day, everyone.